Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Walmart stock, ticker symbol WMT. So the first thing I do want to look at, which I think, looking at numbers like this is pretty interesting. I want to look at, just the total store counts across the globe for Walmart. So in the US, they have about 4,740 Walmart stores currently. Then they also have about 599 Sam's Club locations. So, Sam's Club is owned by Walmart. They're a little bit of different type of store. I think they have some more membership stuff, which is sort of interesting as well. But that gives a total for the US of 5,339 stores. And then they list these other countries throughout the world. So, Chile, Costa Rica, El Salvador, Guatemala, Honduras, Mexico, Nicaragua, Canada. So a lot there in, Central and South America, and then Canada, of course. Europe is pretty much nothing there. I don't know why they have United Kingdom listed, even though they have 0. Then they do have some, in Asia with Japan, China, and India. Again, they have 0 listed for Japan. Maybe that means, they're trying to open some stores there, but they're just not there yet, I guess. I'm not sure why that is. And then they have about 300 in Africa as well. So I just think that's kind of cool to look at, just to get an idea of, where they have most of their stores. Obviously, most of them are in the US, but actually a lot in Mexico as well, 2,675. So we're also going to look at the earnings release from fiscal year 2022 quarter 2. So they had a total revenue of 141 billion, which was up about 2.4%. This, they say, was negatively impacted by 8.9 billion, which was related to divestitures, and excluding currency, total revenue would have increased 0.6% to $138 billion. So they're basically saying that 1.8% of that currency increase was just from, 1.8% of that revenue increase was basically just from currency, which is kind of interesting. They say that Walmart US grew market share in grocery, and comparable transactions were strong at 6.1%. Walmart US operating income increased 20.4%, and adjusted operating income increased 12%. E-commerce sales grew 6% and 103% on a 2-year stack. They had strong growth in advertising businesses globally, including nearly doubling sales in Walmart US versus last year. Sam's Club comparable sales increased 7.7%, and e-commerce sales grew 27%. Membership income increased 12.2%, with member count reaching an all-time high. They said Walmart International net sales was $23 billion, which was actually a decrease of $4 billion or 15.2%. And this was, negatively affected by those divestitures. And changes in currency exchange rates positively affected net sales by $2.4 billion. So that's pretty interesting to see that currency change affecting those sales negatively when it pertains to international sales, but positively when it pertains to the US sales. They said consolidated gross profit rate decreased 15 basis points. Walmart US increased 20 basis points. Consolidated operating expenses as a percentage of net sales declined 81 basis points, and adjusted declined 47 basis points. Consolidated operating income was 7.4 billion, which is an increase of 21.4% with strength across the company. Consolidated operating income as a percentage of net sales increased 83 basis points, adjusted increase of 58 basis points. And in just the first 2 quarters of fiscal year 2022, they repurchased $5.2 billion in shares, which represents about 25% of the $20 billion authorization announced earlier this year. So that's pretty exciting for people that are already shareholders. And then down here, they do, go through the balance sheet right here. So basically, that quarter ended at the end of July 2021. So they compare it to, the beginning of the year, and then the end of the second quarter last year. So current assets are sitting around $78 billion, which is a bit lower than at the beginning of the year, but higher than last year. And, total assets around $238 billion, which is pretty much in line with where we were at last year. Total liabilities, or current liabilities, around $81 billion. Again, pretty much right where we were at last year this time. And then the total liabilities, they do not list them, but we can basically imply them here. So total equity is 87 billion. So that means the total liabilities is basically the difference between the total equity and the total assets. So that means that the total liabilities are around $150 billion, with that 39 billion, $40 billion in debt, as a part of that. So overall, they do have a slightly higher total current liabilities than current assets, which is a little bit interesting and generally not the best thing to see, but at the same time, it's really not that huge of a deal since it's, pretty close there. So I don't think that's too much to be concerned about, but I think, it would be better for us to see them have a little bit better of a current ratio in the next few years. So we're also going to look at the dividends here. Currently their yield is 1.48%, which is a payout of $2.20 per year. Their payout ratio is around 35%, which is super awesome to see, and they've actually been growing the dividend for a really long time, 48 years there, but their 5-year dividend growth rate is only 2.08%, which is just pretty low for a dividend company. And if we actually look at their dividend history, their dividends are around 55 cents per share per quarter, and for the past like 5 years or so, they've just been raising it by 1 cent per share per quarter. So that's really not what you want to see if you're investing in a company because of its as a strong dividend company. You really want to see a little bit more increases in those dividends. And especially since they have a pretty low payout ratio there, they do have plenty of room to grow the dividends. So I would really like to see Walmart do that. We can check out the PE ratio here to get a little bit more insight into that payout ratio and how that's been changing over time. And we can see the payout ratio is pretty low the past 10 years, around 10 to 12, and then in 2017 and 2018 they had some drops in earnings. They're pretty substantial, from around $4.50 per share their earnings dropped to around $1.75. so that's like a 60% drop, maybe a little bit more in earnings. So as a result, their PE ratio went way up. And then they were able to grow earnings pretty well again. And then the last few quarters, they've just dropped off a little bit as well. So the PE ratio has now climbed up to 41.55. And you can see pretty much this whole time, the stock price has just been going up and up and up pretty steadily. So honestly, right now, I really don't like this trend very much. Generally, it's on the up, but these last 5 years or so have been a little bit rocky and just kind of weird. So I'd like to see more steadiness and not as much spikes in the graph, I guess, because generally speaking, it's not good to see these big dips here, and as we have a little bit of a dip in the earnings as well. So looking out for the next 4 to 8 quarters, next year or two, I'd like to see those earnings either recover a little bit, or at least maintain a steady rate and not be changing all over the place so much. We can compare them to the overall industry or sector. They're in the consumer staples sector, and I would probably put them in this retail industry there. So as we can see, the average for the sector is around 27. So again, Walmart is definitely overvalued compared to the sector there. And then the average for retail is 20.61. So Walmart, is pretty much double the PE ratio of their industry, the retail industry there. So definitely not the best thing to see. We also can look at Finviz here with the stock chart a little bit, and you can see actually just in the past month, since the beginning of October, they've had a pretty big rally here up to around $150 per share, which looking back doesn't look like the worst price over the past 8 months. But if we look a little bit further out, we can see that pre-pandemic, their pretty much high was around 120. They intraday one time they got up to around $125 per share, but that's really the highest they got before the pandemic, was around $120 a share. So I think right now seeing them close to 150, sort of similar to the PE ratio, or what the PE ratio is reflecting, I think that's just much too overvalued, at least for me, to be buying this stock, especially with the low-ish generally dividend yield and the very weak history of growing their dividends, at least in the past 5 or 10 years. They've been growing them for a long time. They have been consistent in that, and that that is something to say, but they really just have not been growing it as quickly as I would like to see. Definitely comparatively to how much the stock price has been growing, So I think right now, Walmart, I would say, is a bit overvalued, and I honestly probably wouldn't be very interested until, closer to that 130 or 125 range. And, even at that point, I'm not so sure I would be super interested there. For me, I think I would just have to see them grow those dividends a little bit more, and just have a little bit more confidence, instill a little bit more confidence in shareholders who are looking for those dividends, because that's something that I definitely value. So let me know what you guys think of Walmart and if you do own any. And thanks for watching the video. I really do appreciate that, and I'll see you in the next one.